Berkshire Hathaway shares hit fresh all-time highs on Thursday on both the A shares and the less expensive B shares, as Warren Buffett gets ready to unveil his latest annual shareholder letter. Buffett's folksy charm and his down-to-earth ways have long made his shareholder letter a must-read for the investment community, and this year there will be a few topics that investors should be focusing on when the letter is released Friday afternoon. A year ago, succession was the biggest topic for Warren Buffett, and he let investors know in his letter that the board of directors of Berkshire Hathaway has already decided how to split up his role after he eventually departs the company. The CEO choice has not been made public, but he has announced that the investment portion of his job will go to Todd Combs and Ted Weschler, and that his son Howard is likely to take over as Berkshire's chairman. Now, I wouldn't expect any more details on the CEO position this year, as Buffett and Berkshire's board have decided to keep that close to the vest, at least for the time being. Buffett's health also became a concern over the last year as he disclosed that he had been treated for prostate cancer. Those treatments were wrapped up in September, it's understood, and Mr. Buffett's health probably won't be as much of a factor this time around, although that remains to be seen. Berkshire's investment portfolio will also be a key topic of interest, and Wells Fargo actually became the firm's largest stock holding at the end of the year, surpassing longtime holding Coca-Cola. Also in the latter half of 2012, Buffett cut longtime portfolio positions in Johnson & Johnson and General Electric, dividend-paying stocks he had long had large positions in. Buffett's operating companies will also be a subject of Friday's letter. Typically, he gives a rundown of exactly how the businesses performed and what worked and what didn't over the course of the last 12 months. Now, in last year's letter, Buffett said that he was dead wrong about the housing market and that he had been too early to expect a rebound from the U.S. residential market. This year, he'll probably be singing a different tune, given that home prices, home sales, and a number of other construction and housing-related metrics improved substantially. Buffett's businesses, including Shaw Carpet, Acme Brick, and Benjamin Moore Paints, likely enjoyed benefits from those trends. Berkshire's acquisition strategy is always a topic of focus every year, and Buffett recently teamed up with 3G Capital, a private equity firm, to pay more than $20 billion to acquire Heinz, the ketchup maker. Now, given that Berkshire is not going to be operating that business, it'll actually be 3G, an investment firm run by a trio of Brazilian billionaires, that will run Heinz. Buffett may still be in the market for another acquisition that will come into the Berkshire family. He always says that his elephant gun is primed and he has plenty of liquidity to do deals. It'll remain to be seen if Heinz will be the last one for a while.